What's up everybody, I am Jaspreet Singh from the minorityMindset.com, where money minds rethink rich. When the pandemic first started, I talked about why I stopped buying real estate because there was so much uncertainty in the economy. I had no idea what was going to happen with stimulus, I had no idea what was going to happen with unemployment, I had no idea what was going to happen in the economy. There was just so much uncertainty happening in the world, so I stopped buying real estate because I had no idea what was going to come next. Now that we're here, I still don't know what's coming next. There's still so much uncertainty ahead of us with the unemployment rates and with all this money printing and with all the businesses that have gone out of business. So there's still a lot of uncertainty ahead, but it's not as uncertain as it was back when the pandemic first started. So I started to kind of get back into the swing of things with real estate, but the market has changed. The most obvious thing is prices. Home prices have skyrocketed since this pandemic started because we saw interest rates get cut, and so people wanted to use these low interest rates as an opportunity to go out and buy homes. So everybody started buying homes, and we had a small inventory of homes available for sale. So home prices skyrocketed. But beyond just that, we have a material shortage and we have a labor shortage, which is why it is so hard and so expensive to find work to actually do repairs or renovations on homes. And so the whole housing market is kind of like really in a weird state. When I'm investing in real estate, I'm looking for distressed properties. I'm either looking for something that's physically distressed, meaning this property's beat up. It might be ugly, it might have a bunch of holes in it, it might have a bunch of problems in there, and so I can buy this property way below market value, fix it up, make it look beautiful, and that cost for me to fix it up is going to be less than what the fair market value cost is. So now I just got a property on a discount. Or the alternative is I'm looking for financially distressed properties. This is more commercial properties, apartment complexes, and so there'll be an apartment complex where the owner is not making any money because they don't know how to manage the property, and this is where I can come in and I can bring my team and turn the property around. And now I bought this property at a big discount because the owner was bleeding cash and they wanted to get rid of the property. So that's where I come in. It's a little bit more work, but I can buy the property at a discounted price. Right now, it's definitely tougher to find a good deal. Not impossible, but it's definitely tougher. And in the commercial side of things, the apartment complexes, there's almost nothing for sale. I have some people working for me that are trying to find deals, but we're having a tough time doing that. But in the residential side, I'm still finding some deals. It's not as easy as it was, but there are still some deals here and there. I found a home on sale for $120,000 and it needs work, quite a bit of work. And I was able to negotiate the price down to $110,000 because I came in fast. And so I got into contract to buy this home for $110,000, and I'm in contract. And as soon as I enter into a contract to buy a property, I always negotiate a due diligence period where I get at least 10 days to go through the property, bring in my private inspector, bring in my contractor, and see what work needs to really be done. That way, before I actually buy the home, I know exactly what needs to be done. I know what my costs are going to be. That way, I'm not going to be surprised as soon as I get to the closing table, because now I find out that I need to put in a new roof or I need all these other costs I need to put in. I have my private contractor and my own contractor go through the property so I can see what needs to be done and I know what the cost is going to be. I try to get as many inspections done as possible because there was one deal where I didn't do my own private property inspection, and that deal ended up biting me in the butt. It was the worst real estate deal that I've ever done, and it was the only real estate deal that I ever lost money on. I already made a video where I talked about that. If you want to watch that video, I'll link that video for you in the description below. But after that, I always learned that I need to have a private property inspection, and I try to get as many inspections done as possible because I want to know everything about the property before I actually buy the property. So I get a building inspection, and this building inspection looks for a whole bunch of just kind of basic foundational things. Is the property in good shape? How is the roof? Is there any mold? How's the furnace? How's the AC? And then I like to get a sewage line inspection where a plumber comes in with a camera and they run this pipe down into the sewage, the main city line, to see if there's any blockage there. And then I like to get a termite inspection if there's a lot of wood on the property, because I want to know exactly what's going on and if there's going to be any major costs as soon as I buy this property. Before I get into the renovation and the numbers, I know quite a bit of people in the real estate space because I've been investing in real estate for probably a decade now, and so I know a lot of people. When I first started investing in real estate after the 2008 crash, we were in this market where people were begging for work. Like, if you had any work, no matter how crappy the job was, you had a line of contractors that were waiting to do the work, and they would be willing to do whatever it took to do the work and do a good job. Like, there were some circumstances where in one property, contractors have to come in the evening after 8 p.m. and they had to work all night and they couldn't work during the daytime. And back then, any contractor was willing to accept that job because contractors just wanted work, and so people were willing to do whatever it took to do the job. Now, it's very different. Everybody wants to get work done, so it's hard to get a hold of a contractor, and if they don't want to do your job, they're not going to do it. So at this particular property, I was getting 3 inspections done. I was getting my building inspection done, I was getting my sewage inspection done, and I needed to get a termite inspection done. The building inspector and the sewage inspector were 2 people that I knew pretty well. So I knew they were going to come out and do the work, but the termite inspector was someone that I've never worked with in the past, and I told them this property was built with a crawl space, and I don't know how much wood is really on the property, but I wanted to get the inspection done anyways. If you're not familiar with what a crawl space is, properties can be built on 3 different foundations. One is a basement, so a home can have a deeper foundation, which is a basement, and if you have a basement, then it's very easy to see the plumbing and the piping, because now you can just walk into the basement and you can see where the plumbing and piping and the mechanicals are. A crawl space is when a property is built with some space underneath the home. This is called a crawl space, and so it's not a basement where you can just walk underneath. You have to literally crawl underneath the property if you want to replace the plumbing, so it's a little bit more kind of inconvenient than a basement, but it really just depends on where you're located. Some areas you cannot have basements, and so you'll see more crawl spaces. The third option you see is called a slab. And a slab is where you have just a cement foundation, and so if now you have plumbing issues or other things like that, it can be very expensive because now you have to bust out the cement to fix those things. Now look, I'm not a contractor, I'm not a building expert, I just know the basics of how real estate works because I've been investing in real estate. But the thing about crawls is you can kind of have different foundations of crawls. Some crawl spaces can be built with cement foundations and others are built with wood foundations. And so if you have a wooden foundation crawl space, which is now kind of like the groundwork of your property, if it's wooden, you have the risk of termites coming in there, and if you have termites in there, well, that's not really good for your foundation. That's why I wanted to get a termite inspector out, because that way they can look at the crawl space, see if there's any termites, and that way they can check all around the house to see if there's any other termites on the wood. Anyways, I'm going through the property with my building inspector, and we're going through the property and we open up the crawl space because the building inspector needs to go into the crawl space to take a look at everything underneath to see if there's any mold or any other issues there. And as we're doing that, the termite inspector shows up, and he shows up in his brand new F-150. The termite inspector looks at me, he looks at my building inspector, and he says, "Nope, not gonna do that," and he walks out. That was it. He didn't say bye to me, he didn't say bye to the building inspector, he just walked out because he didn't want to go into the crawl space. This is one of the stranger things I've seen happen, because I had already spoken with the termite inspector, told him all about the property, and I was going to pay him to do that, but he didn't feel comfortable, he didn't want to go into the crawl space, and so he just walked out and rejected hundreds of dollars and just walked away. Me and my property inspector have been working together for years, so we both looked at each other kind of really confused as to what was going on, because we've never seen this happen before, and we both kind of go after him saying, what's going on? And he was like, I don't go into crawl spaces. That's not for me. And so because he didn't want to go into the crawl space, he didn't want to do any of the work, and he was willing to walk away from the work. Going into crawl spaces is not for everyone. I don't like going into crawl spaces myself either. But if that's the industry that you work in, and when that's what you specify that you're going to do, because we're willing to pay you to go into the crawl space to do this inspection, and then you come out and you say, you know what, I don't feel like it, and then you just walk away, that's where it's a little strange. The funny thing is, after all this happens, a building inspector goes down into the crawl space, he turns on his flashlight, and he says, "Jaspreet, you just saved yourself a few $100s. You have no wood down here," because the foundation for the crawl was built on blocks, cement blocks, and so there was no wood. There's no place for termites to be. And so if the termite inspector would have come in, done a few minutes of work, if he just spent 3 minutes going into the crawl space, he would have seen that there's no wood, there's no inspection to really be done, and he would have been able to walk out with a $300 check. I don't know about you, but 3 minutes for $300 doesn't seem like a bad deal. But this is just kind of like the environment that we're in, where there's so much work, there's so much demand in the real estate market, that now not only do you have to bid for homes because everybody wants to buy a home, but it's hard to find work, because people are able to pick and choose what jobs they want to do, because there are so many jobs out there. If it's a job I don't want to do, or if it's a job that someone else doesn't want to do, they can just walk away, because there are so many jobs out there, which is making it a little bit harder to compete in the real estate world, at least as an investor. Because if you're buying a property as a real estate investor, then some of these properties that you're buying are pretty beat up, and if you want to turn them around, you got to do some dirty work. You got to pull out the carpets, you got to clean out the crap, and you got to make it look nice. Yeah, it costs money and you're getting paid to do that, but if you don't want to do that, there are a million other jobs out there that you can do. It's bad news for real estate investors, people like me, but it's great news for contractors, because there's a lot of work out there and you can pick and choose the jobs you want to do. It's really turning into a financial war, because there was another property that I found. This property was on sale for $124,000. Again, in a really good area, but this property needed work. And so I came in and I bid $124,500 because I really liked the area and I wanted to own the property. So I came in $500 over asking price. But somebody else came in and they bid $140,000 for the same home. So more than 10% over asking price, and they beat me and they got the property. So it's a real frenzy where when you see a good property, people will fight each other with money to get the property. I mean, this is like $15,000 over asking price, which isn't anything major. I mean, 10% is pretty big over asking price, but I've heard deals for some of my realtor friends where people are bidding like $100,000 over asking price for nice homes just because people really want that property. Now look, I know there's a lot of worries about a real estate crash and a potential housing market crash, and I already made a video talking about what factors could cause a potential housing market crash. If you want to learn more about that, I'll link that video for you also in the description below. But the reality is, at the end of the day, your cash is losing value in your bank account and is better off in assets. The alternative approach is keep your money in cash, and then when a crash happens, that's when you can come in and buy assets, stocks, real estate, whatever it might be, and you can buy them at a discounted price. But there's a couple of issues with that. One is you don't know if a crash is going to happen. I mean, we do know a crash is going to happen. That's just how assets work. You're going to have booms and busts, but we don't know when is it going to happen. Is it going to happen this year, next year, in 5 years, 10 years? I don't know. What we do know is there are a lot of deep fundamental issues in the economy. We have a lot of issues with unemployment. We have a lot of issues with businesses going under. We have a lot of issues with money printing. All of these things are not going to just get fixed overnight. And so these are going to cause deep issues, and they're going to come up again whenever the next crash happens. When will it happen? I don't know. But this is where you kind of have to be smart with your money, because if you are investing your money, you have to understand, yes, there's a risk for a crash. I have no idea when it will happen, but there is a risk for that. And so when you're making your investment decisions, you have to be smart and you have to understand what your goals are with your investment decisions. If you're talking about real estate, for me, I need at least 7% a year on my money, cash on cash. This is cash flow. So if I invest $1,000, I need to make at least $70 a year in passive income from my rental profits. That's the profits. That's after paying all my expenses, my taxes, my insurance, my maintenance, my management, and some vacancy costs factored in there. And so if I'm making a minimum 7% return on my money, it's a good deal for me, and I'd be willing to invest. Now, if a crash happens and real estate prices get cut in half, remember, a big if that happens, I'm still okay, because I made my investment for cash flow. I'm not making my investment for appreciation. If that appreciation happens, that's great, but I want to invest my money in a good area where property values go up, not just so property values go up, but because there's demand for this area and people want to live there, so that pushes rental prices up. So I'm looking for properties where people want to be, that way I can own real estate, something real, physical, tangible, something that I can see, feel, and touch in an area that people want to be. The second part of being prepared for anything is having cash reserves. You have a whole industry of people marketing no money down real estate, which works for some people, but not for me. If you're investing with real estate with debt, then you want to have at least 20% equity in your properties. That way, if things go bad, you still have some skin in the game, and you also want to have some cash in the bank. That way, if your tenant stops paying you, or if your tenant damages the property, you have money to survive. That way, you don't get the property taken away from you. So it's really all about making calculated investment decisions and things that work for you, because my investment goals might not work for you. My financial goals might not be your goals. And so you got to figure out what your goals are, and then figure out what investments are going to help you take you to your goals. My goals are not yours, and so you need to make your own financial decisions, because the amount of risk that I'm willing to take is not the amount of risk that you're willing to take. So you got to find the right ways for you, and you got to understand the best path for you. All I'm trying to say is that right now we are in a hot real estate market where everybody wants to be a homeowner, so home prices are skyrocketing, and it is very hard to find good work because everybody's trying to get work done. What that means for you is you got to first understand what's going on and then be willing to adapt to the times, because no market can stay one way forever. Back when the 2008 crash happened, everybody thought that real estate prices were going to continue to go down forever. Well, now everybody thinks that real estate prices are going to continue to skyrocket forever. No market can stay in the same kind of format or style forever. No market can go up forever, and no market can go down forever. And so when you're making your decisions, whether you're buying as an investor or buying for a place for you to live, you just got to understand nothing can stay the same forever. And so you want to make decisions based on sound fundamentals, not based on emotion. Don't get caught in the hype. Just understand what's going on and understand why you are buying, and make sure you can afford what you buy. Now, before I let you go, I want to show you how I run the numbers on this property. So my goal is to buy the property for $110,000. And I'm anticipating to get the property renovated for right around $15,000. I think I can do it for a little bit less, but I'm giving myself a little buffer because things always go over. So give yourself a little buffer, which will cost me $125,000 to get this property up and ready to go rented. I think I can rent this property out for at least $1,250. Because it's a really good area, I think we can get $1,300, but I'm gonna go with $1,250 for the numbers. I called the assessor, and my taxes are gonna cost me right around $172 a month. My insurance company quoted me right around $75 a month to insure the property. My maintenance, I like to be conservative here, so I'm giving myself 10% of my monthly rent for maintenance here, $125 a month. I'm hoping that the maintenance costs are going to be way less because I'm going to renovate this entire property. So I'm hoping there's going to be very little to no maintenance costs, but I always like to add that in there. So $125 for maintenance. My management company is going to charge me $50 a month to manage this property because I worked out a deal with them. And vacancy, another $104 a month. I always like to calculate 1 month of vacancy because once you get the property, it's going to take some time to find a tenant. And so I always like to factor that cost in. And so this is going to leave me with right around $724 a month. Now this is before any debt costs, if there are any debt, but $724 a month, if you multiply that by 12, that is a 7% cash on cash return on my money. And so this is where you got to understand, okay, my goal is a minimum 7% return. And based off of these numbers, I'm hitting that return. My goal is to beat that because I'm hoping I can get a higher rent. I'm hoping that my maintenance costs are less, but at the very least, I want to make sure I'm at least getting my minimum return. I don't have any debt on this property right now. I'm buying this property cash. Later on, if I want to refinance out, I can do that. But these numbers I'm running with the cash on cash return because I don't have any debt on the property at the moment. If you enjoyed this video, here's the video about investing in real estate that I think you'll love. And while you're at it, download our real estate investing PDF. And as always, keep hustling. If you are an experienced investor and you have the right team, then you can come in and buy this property and turn it around and make a much bigger profit because now you're buying this property for way below market value. The key for any of this to work is you got to put your emotions on the side and you got to